Hello, I'm real estate agent Monica Williams, and I am here in Bakersfield, California. And welcome to Monica Sells Bakersfield. Here with me today, I have Martie Anderson of Signature Home Lending, and she's going to tell us a little bit about herself, why she does the things that she does, and then we will go ahead and just answer a few of your questions. So, Martie, what do you do? Why do you do it?
I'm a loan officer, so basically what I do is to help people get qualified to purchase a home. Some people come to me when they're interested in buying a home. So what I'll do is I'm able to either qualify them at the time that they come in, or I give them a plan by which to go by and get ready to buy and purchase a home. Your next question, why do I do what I do, is because ultimately I love helping people. That's the underlying reason.
So that's a woman after my own heart. It's not just about you or me, you or me. It's about how do we help others as well. And when you help enough people, you ultimately help yourself. So I like that. So, okay, you said that either you can help people get a loan or you give them a plan for a loan. What does that look like when somebody comes in? When should my buyer or seller looking for that next home come to get a loan? Should we look at homes first, or should we actually talk to you first?
Yeah, no, I think it's a good idea for buyers or anybody who's looking to buy in the near future to come meet with me so we can go over the credit, go over their income, their job, and also their assets to see how much money they have saved, or whether or not there's a program that can help facilitate a down payment or can help them pay for closing costs. So it's a good idea to meet with me first.
Oh, okay, so I heard that word program and help with closing costs, right?
Yes.
So what kind of programs are out there? I know there's a lot. This is the government, but what type of programs are out there? And which one is your favorite and why?
My favorite program of all time, and I'm known for this, is the Cal HFA. I'm a Cal HFA preferred lender. The Cal HAFA has been in existence in California for 35 years. So if you purchased a home in the past and nobody ever told you about the Cal HFA, it's been in existence for 35 years. It's a first-time home buyer program that's only for first-time home buyers, meaning that you cannot have owned a home in the last 3 years. Secondly, there's income limits per county, so it depends on what county you live in. And also, too, that program, it helps you cover your down payment as well as your closing costs. And the scores required, or the credit score needed, is a 640.
Okay, so 640, that's not too bad.
It's attainable, absolutely.
Definitely. Okay, so that's on the buy side, is a first-time home. I can't talk right now. So that's for the first-time home buyer. Are there any programs for somebody who actually has owned a home and looking to do something else?
Absolutely. We have, for example, if I always give my customers an option. If they want to look into a down payment assistance program, even though they do own a home and would like to buy, say, for example, we call it owner occupied home, meaning they're going to live in the home that they purchase. There are programs. So say, for example, if you own a house right now, but it's become too small because you have a growing family, there is a GSFA plan.
Okay.
And what that does ultimately is that it provides you with the assistance needed to buy another house, even though you decide to hang on to the one you currently own.
Oh.
So if you decide to rent out the house that you currently live in, that's definitely doable. You can rent out the smaller house that you first purchased years ago, rent it out, buy another house, and get assistance to purchase that other house. The only condition that needs to be met is that you live in it. You live in that new home.
Okay, that's something that's a good thing. I don't know if I've heard of that before. That's awesome. Okay, so now let's talk about the elephant in the room, and that is the current interest rates. We had gotten kind of spoiled and used to the low interest rates, 2-3%, I think, and now we're starting to see it climb a little bit. How is that impacting, or what impact have you seen, and what do you think will happen by the end of the year?
I think the sentiment has changed. I know when the interest rates were at all-time lows at 2%, 3%, A lot of people were out there buying houses. We had a huge market. We had a huge amount of people looking for houses.
And people were overpaying, going above
They were
listing.
overpaying above listing, absolutely. Well, now that it's basically all over the newspaper, rates have been increased. It's all over social media, rates have gone up. I've been doing loans for 30 years. I've sold or done loans at 9.99, 10%,
Whoa.
7% interest rate back in the day. Interest rates really are not high. They're not high. I think what we're seeing the purchase price is still maintained. So we're seeing somewhat of a higher purchase price still. It's corrected a tad and the rates have gone up a little more incrementally. So people are kind of feeling that they're just not affordable anymore. But interest rates still
Okay.
are low enough to help people purchase a home. And I would say that it's a good idea to meet with me. Let's go over some payments and some purchase prices and see what we can do.
Okay. So I've talked to quite a few people and they're like, well, you know what, Monica? I think I'm going to wait for the home prices to come down. And guys, how much do you want it to come down?
Yeah.
Because I just don't see it coming down $25, $50, $100,000 anytime soon. As a matter of fact, you know what? Let me show you this chart real quick. And let's see. Let me hit share. Great. So right now, one of the things that we look at are the days on market. And when you come all the way down here to the bottom, this was from July of this year, we're showing that the average home stayed on the market about 20 days. And as you see, we went down a little in April to 16. And again, last year was such an incredible market. Things were flying off the shelves. We didn't have enough inventory. And for prices to go down that much, kind of like 2008, the inventory has to go down. So let's look at this, and then I'm going to bring Martie back in. So right now, here we are, July this year, we have 1,167 homes that were on the market. This red line, that's for sale. This red line right here at 753, that says those that are pending. So when you subtract 1167 from the 753, what's left are the housing that are actually available to buy. So in order for housing to go down in a large amount of money, that inventory is going to have to come up. Exactly.
It has to be, there's got to be like a surplus of homes, and there is not a surplus of homes. There isn't.
So right now we're at $214 per square feet. The highest was in April again at $219, and the lowest was back in May 21st at $185 per square foot. So guys, we've still got a lot of room. So I know one of my favorite movies talks about, or TV shows, it's The Rookie. I like cop shows, go figure. But it says that focusing on fear will not change the outcome. So again, I suggest let's come in, talk to Martie, find out what you can afford. And if you can afford right now, what is it that needs to happen? So we talked about the pie chart. And just let's revisit it real quick. Talking about credit utilization. I know I've heard that the credit utilization is the total credit that you have available to you, and then how much you utilize. From a mortgage standpoint, what needs to happen? How much credit utilization do we have?
Okay, so I know it's kind of tough right now because I know that as a lender, I have to remain realistic as to what's happening. Okay, yes, we're dealing with higher gas prices, higher food prices, everything's increasing. So it's very difficult for a lot of people who are in today's market or even nowadays. Sometimes we're tempted to use that credit card. to charge everything, to charge whether it's a burrito
Sure.
or a Taco Bell. Yeah, and you'll be paying for that burrito for the next 5 years, by the way. But what I'm saying is, the fact of the matter is that it's best not to use the credit card as much. Maintain only 30% as a balance of every credit card. So it's kind of like it's a difficult thing to do because it's important to have credit, but too much credit is not a good thing. Too much of too much of anything is not a good thing.
Right.
So having too many credit cards is not a good thing. And it's also not a good thing if you exceed that 30% of the credit limit as a balance.
Okay.
So if you can use cash, and I know it's tough because discretionary spending has decreased. People don't have a lot of leftover cash once you get that paycheck. We have taxes, we have utilities going up, food going up. But I guess this is a time where we can say, is that Starbucks cup of coffee really a need or a want? Right now, it's kind of like a want. So if you can save at Starbucks $5 and use it for gas or save it, right now is a good time to save and utilize your credit cards as minimally as possible.
Because what you can do is buy a coffee maker and get your coffee and save that way. So just look at other ideas. We're not saying don't do it, but just be careful.
Just be careful.
Okay.
Don't rely on those credit cards. Don't make those. I mean, if it's something that you feel that you want because you just want it, don't just try to stay away from the credit cards for now. Utilize them and basically make sure that you're able to pay those balances down to 30%.
Magic word.
Yes, and make your payments on time and stay on top of those payments every month to the point where you know exactly where you stand on each credit card account.
That's great.
Yeah.
Right. So I'm going to change gears a little bit.
Okay.
So I am a new home buyer or just anybody, and I want to buy my house.
Mm-hmm.
I come to you. What do I need to have?
So basically it changes, it varies. So if you're, for example, a person who gets paid with a W-2 and a pay stub, it's important to have your most recent 30-day pay stub and your last 2 year's W-2s. Okay. Those are the basics. We don't need to have your tax returns if you get paid with W-2s. We don't need to see your tax returns if you have, say, no other streams of income. If it's just basically your one job, that's all we need is your 2 years W-2s and a 30-day pay stub, as well as proof of assets. What are you planning on using for the down payment and the closing costs? Are you going to use your 401k? In that case, we need a copy of the 401k plan. If you're going to use money you have saved in the bank, then you bring your last 2 months bank statements. If you have money saved underneath the mattress,
I was going to ask you about that.
The mattress will be great. I'm just kidding. We don't use mattress money, so yeah, that won't work.
So then let's come back to it, because I actually worked with somebody and they literally had money, wasn't in the mattress, but I think it was a safe.
Okay.
How long does that money need to be in the bank? Because you just told us that you can't have money at home.
For FHA, which is a loan program, we just need 2 months seasoning.
Okay.
Mm-hmm.
So 2 months in a bank.
Seasoning. Mm-hmm.
Okay. And that's called seasoning. All right.
Yeah.
Gotcha. Mm-hmm. All right. So let's say I don't have a W-2. Let's say I'm on a 1099. Okay. How does that change the situation?
So I know people don't know what 1099s are. 1099s basically, it's the form that you're given by your employer. It says 1099 right at the top. That 1099 basically means that you're pretty much an independent contractor. What we need to see are your 2 years tax returns. If you've been self-employed for quite some time or an independent contractor for quite some time, there are certain programs where we only need 1 year's tax return. We just basically want to prove longevity. If you've been in that specific business or industry, we don't need to see 2 years tax returns. If you've been a truck driver for several years and only have 1 year tax returns, but we can prove through other means that you've been in that industry longer, then we'll just ask for that information.
Okay. All right. That's good.
We always ask our customers, if you're self-employed, send me a copy of your business license or your permit. Or secondly, maybe we can even ask your CPA or tax preparer to just prepare a letter. Okay. So it's pretty simple.
So I've heard of pre-approval and pre-qualified. What's the difference and which one do I want to be? Or is there a difference?
So there is a difference. Basically, when you're pre-qualified, it just basically means that you brought me some information. I looked it over. Based on that information, we were able to run what we call a desktop underwriter. We were able to get a pre-qualification. So ultimately, it's not the final loan approval. Final loan approval, it's basically, it's a more, the process entails a little more thorough investigation. That's when we verify the information. That's when I collect your W-2s, your pay stubs, and then I submit them to an underwriter. And I also she's not just going to base everything or the decision on a W-2 or pay stub. We're going to have to verify this. We're going to have to take it one step further, contact the IRS to make sure that they have the same numbers on their end as we have on this W-2.
Wow.
So we have to, I would say that the actual final loan approval entails verifying that all this information actually is what you're presenting it is. When we get that final loan approval, that basically means you're approved. Now it's a matter of finding your house. So you don't have to have a property to get final loan approval. What we do is we'll just go ahead and submit the loan. And when we submit the loan, the underwriter might ask for additional conditions, which in most cases they do ask for additional information because they're verifying it. So don't get frustrated.
Okay.
I know for a fact that they are going to ask for more conditions, but as an experienced loan officer, there's certain things that I can do to let my underwriter know that those other conditions aren't necessary because we've already met them given this information over here. But for the most part, there will be more conditions. I can probably navigate to kind of minimize them, but there will be more conditions. That is a final loan approval. All you need now is just the house.
So let's say that I had a final loan approval,
Okay.
but I got it 3 months ago when interest rates were better.
Okay.
Do I need to do anything?
Absolutely. If the interest, say for example, if you have a pre-qualification letter that's 3 months old, interest rates have changed since then, credit probably has changed. So it's a good idea to make sure that we take a look again at your income and also your assets. Did you save? Do you still have the same 20, 30,000 that you had
Okay.
4 months ago, or did it drop? Right. So yeah, we definitely need to just update it, but it doesn't take very long.
Okay. I have 2 more questions
Okay.
for you. So, because we're going to have to bring Martie back another time, right? So, this question is, let's say I've got some parents and they want to help me out.
Okay.
How does that work? They want to give me, let's say, $50,000.
Okay.
How do we handle that?
Well, my first question would be is, where do your grandparents have the money?
They have it in the bank.
Oh, it's in the bank? Perfect. So then what we would need is just a copy or proof from your grandparents if it's a bank statement. So then we would just basically need a bank statement, a copy of that bank statement. And then later on, we'll request a gift or letter, and my processor usually will email you something, the gift or letter that you can have them sign. And that's about it.
Okay. All right. And so my last question is actually not a question. I want you to maybe give us 2 things. As we're moving forward, what do you want to leave with our viewers about the mortgage, where we are, and just, real estate?
Well, I tell a lot of my customers, because I'm not just a loan officer, I'm an investor myself. I've noticed that the best way to acquire wealth and to share that wealth with your children and generations to come, or even acquire wealth for yourself, is through real estate. So I encourage a lot of my buyers or people who are out there, invest in a home. It's important. If you already have a home, get a second home. If you want to retire early, the best way to do it definitely is owning real estate. So if you have any fears or concerns, that's what I'm here for, to help you address them. So ultimately, I just encourage people to own real estate, because ultimately, if you look at a house that you maybe drove by with your wife last week or with someone else, if you look at that house that you wanted to buy 5 years ago, and you look at what it costs, what it actually was costing 5 years ago, let's take a look at it now and see how much it's worth and how much it's cost. That's money that you left on the table. So I would encourage everybody to let's get the process started.
Right. You don't want to be part of that shoulda, woulda, coulda crowd.
No.
One thing about California real estate, it's like this, but it continuously goes
along
up.
with rent. Rent is not on. Rents have increased as well. So would you rather go ahead and pay more in rent, or just look at paying more for your house because it's yours? And eventually you can refinance it and lower your payment. Whereas the rent, you cannot refinance the rent.
That is right. Well, Marty, I want to thank you for your time. It was time well spent. And guys, we are definitely bringing Marty back. She is chock full of information. She is kind. She's a hard worker and she likes to help people.
Absolutely.
So that's why she is my preferred lender.
Thank you.
So again, you can look for her information down in the details below. If you have any other questions, reach out to me or reach out to Marty. And as always, make it a great